Welcome to the Deal Calendar. I'm Suzanne Stevens.
And I'm Kathleen Flynn.
This is our weekly installment of the calendar where we look at stories that we're covering in the Deal newsroom and also important dates in deal making in the week ahead.
And since our last installment, there's been a big development in the Bear Stearns story with a couple of arrests made of hedge fund managers. They were actually arrested at their home. And of course, Bear Stearns is a huge story that we're following at the Deal with continued coverage.
And in that same credit crisis arena, a big shareholders meeting on June 24th, Washington Mutual shareholders are scheduled to vote on a capital infusion of about $7 billion from the private equity firm TPG. It's been a really rough year for Washington Mutual, like a lot of lenders. Their stock is off about 80% from 12 months ago. Their last quarter, they posted a loss of about $1 billion. They've laid off thousands of employees. So in April, the WAMU board approved a plan for TPG to buy shares valued at about $7 billion. Now, what's got shareholders riled up, Mary, is that the price at which those shares were sold to TPG was about 26% lower than the price of the stock on the day the deal was done.
But as I understand it, they're not going to turn this deal down, right? They're not going to vote against it.
Well, you would think they would. If they're upset about it, they would go in and vote this deal down. But there are some provisions in the deal, penalties in the deal, that make it, that some shareholders at least feel like makes it almost impossible for them to vote against it. So we'll be watching that on June 24th. The following day, another troubled lender has a meeting. Shareholders of Countrywide will be voting on a proposed bid by Bank of America. It's a stock swap valued at about $3 to $4 billion.
And there's a lot going on Wednesday, June 25th, in fact, with another shareholder meeting, CSX, the big transportation conglomerate. And in that case, there's a whole bunch of controversial issues about disclosure when investors are trying to buy up more shares. So in that case, TCI has been trying to buy more shares and didn't disclose things that the SEC says it needed to. So there are a lot of people getting involved in this, politicians such as Senator Chuck Schumer. Everybody seems to have an opinion about this, and a lot of people think that it may end up leading to new regulations from the SEC about disclosure.
On June 25th also, Oracle, Mary, announces its fourth quarter earnings.
That's right, and analysts are predicting 44 cents. Something that's not going to be reflected in that report, that's from the fiscal fourth quarter. But something that's happened since then is that Oracle's raised its prices, which I find interesting. It's been a while since they've raised their prices, but this is not exactly the best macroeconomic climate for anybody to be raising prices. Now, some people point out that list prices for Oracle really don't matter. It's all about negotiating with their customers, and nobody really pays those list prices. But there's still a perception out there that Oracle's raising prices. Now, I know at Corporate Dealmaker, you cover Oracle a lot too.
We certainly do. I mean, they are a hyper-acquisitive company. They do, about a deal a month, it seems like. So they have a really active deal program, but it's one they don't talk a lot about. You've got companies like Cisco and IBM that love to get out there and talk about how they do deals, where they find deals, how they structure their partnerships and integration. Oracle really doesn't do that. So we were happy to see that one of their lead deal makers was speaking at ACG Intergrowth recently, a big conference here in New York. And the editor of Corporate Dealmaker, Ken Klee, was able to go. Now, you can read what that dealmaker had to say at thedeal.com/corporate dealmaker. But a few highlights that I think are important is that Oracle doesn't use bankers when they source deals, when they negotiate deals. So that indicates obviously a very sophisticated deal team. They also monitor the performance of their acquisitions for about 2 years. And that's really important because if you're going to see if a acquisition is paying off in the long term, you've really got to look beyond the first 6 months to see how it's performing.
And another big acquirer in the computer industry, Hewlett-Packard, has a deadline. Friday, June 27th, the HSR runs out on HP's acquisition of EDS.
Right. That's a big acquisition that's moving ahead pretty quickly and pretty smoothly. The boards of both companies have already approved the deal. But it's interesting that they have chosen at this point to shuffle their corporate development team a bit. Corporate development is often the home of integration, and obviously there's going to be some big integration challenges ahead.
They had another personnel change in a different arena. Don Grantham left Sun Microsystems and joined HP. Now, Don Grantham was the head of global sales for Sun Microsystems. Sun has not been doing very well lately. It's had a quarterly loss. It's also in the middle of laying off 2,500 people. So, of course, we'll continue to cover all those stories, and that does it for us on the Deal Calendar. I'm Kathleen Flynn.
And I'm Suzanne Stevens. If you have deals you'd like us to cover, please shoot us an email at reporters@thedeal.com. Thanks for watching.